India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning, hello and welcome. You are with us on Bazaar Morning Call and we're coming to you live from the CNBC-TV18 Motilal Oswal studios. It's a Friday morning. We've made it through another week, almost made it through another week. I'm Surabhi Upadhyay and with me as always Nigel D'Souza. Today we have Rima to get the weekend vibe going. Good morning, guys.
Good morning. Happy Friday to all of you. And it's been a good week for the markets. So today could be a bit of a downer given the way global cues have stacked up.
We're not too far away from those all-time highs. So let's see if the bulls can do their thing.
And who would have thought, right? When we started off August, people were a little bit nervous. But now, all-time highs, we're even talking about that. So that's tell you the kind of pullback that we're seeing. But
you know, I was just checking. At the beginning of August was the time when we had that manic Monday. The Dow fell 1,000.
5th of August, yes.
Yeah, and you know, before that, the Japanese carry trade unwinding. Then that reliable recession indicator, SAM, got tested. By the way, guys, US markets are positive now. The Nasdaq is up 0.1% for this month, and the Dow is only down about 0.2%. All is forgotten and all is well so far.
Well, let's hope so. Fingers crossed, right? Because we had a bit of a flutter on Wall Street last night. Suddenly, we had a sell down going both on bonds and on stocks, actually. In fact, the fall was about 1% or so, between 1% and almost going up to 1.5%, 1.7% on the Nasdaq. So the overnight action was a bit on the edge. And like I said, this played out even in the bond market where yields shot up. The 10-year yield was up almost 9 basis points, likewise for the 2-year. So bit of a flutter. And of course, today is that big Friday. It is all about Jackson Hole. The symposium is underway, and today Fed Chair Jerome Powell is going to be speaking. This is basically around 7:30 our time. And markets are eyeing this event with a lot of anticipation. So what's the expectation? Because now we have not just Fed expectations, we have Jackson Hole expectations. The expectation is that the Fed chief is going to guide for the beginning of the rate cut cycle, but no one's obviously expecting him to exactly guide the market with respect to timing or the quantum of those rate cuts. I mean, if you talk quantum, then if you go by the latest Fed Watch, the CME tool, then the expectation is that middle of September, when we get the Fed meeting, we'll see a 25 basis points. That's where the majority of the respondents are veering. It's a very small minority, less than a third, is expecting a 50 basis points rate cut. But in any case, so what caused this flutter yesterday? Well, you can pinpoint the jobless claims data, which wasn't too bad, but it did show up an increase in the jobless claims number. So the number went up by about 4,000 over the previous week, and that led to a bit of a reaction. Basically, it's still telling us that the job market is not doing too well. Remember the downward revision on the full year number that we had yesterday. So that was the big one, and then you're still seeing that jobless claims number come in on the lower side. So therefore, the Dow, the S&P, and of course the Nasdaq, all of them down, yields down, like I mentioned. This morning, Japanese markets are picking off Japanese and Asian markets are picking off on some of that caution. In terms of data, we've got inflation numbers out of Japan. The core numbers, the headline number is fine. It hasn't changed. But core inflation is showing a bit of a decline. So the Bank of Japan should like that. And maybe it gives them more reason to stay on hold and not even think of hiking. Not that they can think of it, I think, after the global market turmoil. But that's the overall global picture. A little cautious is what we've got. Back home, just to quickly talk about the flows. Yesterday, the FIIs were on the buy side. We're talking a net inflow of just under 1,400 crores. Domestic institutions were buyers to the extent of almost 3,000 crores. But the caveat in these numbers is obviously the amount of blocks that are happening, large blocks, right? So the data tends to be a little skewed. In fact, blocks will continue to be in focus today as well. We'll watch out for big ones. Expectations are that Nika and Ambuja could see a lot of action. So let's see how that goes. Before I hand over to Rima, I'm going to watch out for this online gaming space, some of these listed stocks, because yesterday we had commentary from the Bihar Deputy Chief Minister, who is the convener of the GST group of ministers on rate rationalization. Remember all the buzz around how online gaming and maybe casinos as well they deserve to get sort of, a bit of a relief on the GST front. So he acknowledged that, yes, there are representations that have been received, both on insurance. There's a huge representation on life insurance and health insurance, and the GST rate should be far, far lower because these are essential services in some sense. So he acknowledged that, yes, we've received these representations. We're looking at it. The council will come back with its view. So let's say maybe some sort of a trading punt perhaps on the insurers as well as stocks like maybe Nazara and who knows, maybe Delta as well.
Okay, let's put on some more internals on the table. Well, markets have been making higher highs and higher lows now for the last couple of days. So even as the up move continues, it's good to note that the indices, the Nifty particularly, that data will come up for you on your screen, has been making higher highs and higher lows. But yesterday, the range on the Nifty was just about 83 odd points. And this is the narrowest daily range that we've seen in the last 2 months. For our own markets, the up move has continued for the 6th day in a row, but will be run into profit booking today, given the global setup. That said, week to date, the Nifty is up 2.1%. The Nifty is up 1.1%. The mid-cap index is up 2.1%. And the small-cap index is up 3.5%. And the point about flows, yesterday's buy figure by the FIs was only the 4th instance of the FIs buying in the cash market in the month of August so far. And month to date, the FIs have sold about 32,500 crore in the cash market, while the DIs has pumped in more than 44,000 crore rupees. But Nigel, so far that buy on dips is approached, but today it's going to be tested because the global setup has been weak.
Well, that's right, Rima. The buy on dips thesis, that's going to be tested in today's trading session, and that's because of a couple of factors. Overnight, the global cues weren't very, very good. You had the yields that spiked up, the jobs report as well that did come out of the United States. The economic data not looking too good, so that's why the global markets were in a bit of a dizzy. And also the central bank action is going to be crucial. We'll have, the Fed chair that will be talking later today, and you'll have comments coming in from the Bank of Japan as well. So both those two, central bank action will be top of mind. What about the FIs? Well, yesterday they added some long positions. They covered some shorts. Not too much movement. 52% of the positioning is on the long side. What about the clients as well as FIs? Both of them are net long on index futures, but they're aggressively net long on stock futures. Yesterday, there was some mild addition with the FIs. Well, that moved up by around 6,000-7,000 contracts odd, while the client positioning as well came down a little bit. But both of them net long, not aggressively net long, but we like that. So let's move to the next part of the data then. The Nifty PCR. It's moving to the upper end of the range. Normally, the range is 0.7 on the downside. On the upside, 1.5, 1.55 odd has been that. So we're closer to the upper end of the range. And sometimes this tells you that, in fact, that put writing is getting very, very easy because the PCR has moved up. So let's pull up a couple of strikes then. In yesterday's trading session, the 24,800 call, fairly active. 24,500 put, fairly active in trade as well. So just punching in these numbers and going by the premium, we get a broad range out there. On the upside, closer to around 25,000, expecting some resistance. Yesterday, we started gap up, but we couldn't end at those highs. So that's the crucial resistance zone. While on the downside, going by the options data, and the 20 DMA as well comes in, added on the 24,500 mark. That's going to be an important mark that we'll have to track. The Nifty Bank, that's crucial. Yesterday, it made a dash towards the 50 DMA. It couldn't conquer that, however. So it's currently holding above the 20 DMA, but it needs to get closer to around that 50 DMA to help this market trend higher. So the Nifty Bank is going to be the important one. It's showing signs of strength, but it needs to get past that 51,350 odd mark. Stocks that I'm tracking today, well, one of them, Ambuja Cements, because the market had a bit of a sense of this. We as well quizzed the CFO of the company, whether or not the Adani Group will look to pull down some stake or, trim their stake in the company. Well, so the street is positioned for this event where the promoter group is looking to sell roughly on 2.8% at a 5% discount. So post this block will be interesting to see because there's big appetite for Ambuja Cements and large cap cement on the whole. And there are shots in the system as well. So we'll have to see how the stock reacts post that large trade that does take place.
Okay, thank you very much for that. Let's take the discussion back to the U.S. markets and the way forward. Matt Orton, U.S. market strategist and the chief market strategist at Raymond James Investment, is now with us on the show. Great to have you back on the show. Thank you very much for joining in. Well, the big event today is going to be Jackson Hole. Investors are in wait and watch for any kind of guidance on future rate cuts. So first, if you could lay out your own expectations, and can it surprise the market? Because even if he does signal a rate cut is coming in the month of September, it's probably only going to confirm what the market is anticipating.
Hey, good morning, Rima. Great to see you again. And I think you're right. The market's probably going to get confirmation of what it already suspects is going to happen. It's essentially consensus that the Fed is going to cut rates at its September meeting. And the key question is, how much is Powell actually going to broadcast with respect to not only the scale of the rate cut, so is it going to be 25 or 50 basis points in September, but also is he going to give any clues as to the depth of the rate cutting cycle, both for this year and next year? And so market positioning as a whole still looks offsides to me. It's been my base case that the US economy is in better shape than a lot of people have thought. I think that's why we've seen the recovery over the past week or so, because the totality of the data, despite 1 or 2 weak prints here or there, it just doesn't signal the need for the Fed to step in and cut by more than 25 basis points, which would require serious revisions to the summary economic projection. So I think Powell's going to broadcast that that rate cuts are going to be coming. I don't think he's going to give too many clues, both either to the scale of what that cut's going to be or to the depth, because that's just not typically what Jackson Hole is for. So I don't think the market's going to get what it wants. If we get a little bit of volatility, I've been telling a lot of our clients, use that as an opportunity to continue putting capital to work in this market, but use it to build balanced portfolios. Lean into quality, because I think this elevated level of vol is probably here to stay through the fall, or at least until we get through elections.
Okay, Matt got that. Hi, good morning. So stick to quality. I think we're getting similar advice here in India as well, because volatility has become quite a companion in the last few weeks, right? So just tell us a bit in terms of looking at positions beyond the US. We also have obviously the whole question in Japan about whether the whole carry trade issue is behind us or not. I mean, I was looking at data out of Japan as well, the inflation numbers that came out. What's your sense? I mean, for every additional $100 you have to invest, how much would go to the US? How much would go elsewhere? And how much would you put to work in India?
Yeah, it's a great question, Surabhi, and it's one that a lot of clients are asking too, is just, if I'm going to put money to work, where is it going to go? I would say the US is still the top place I would be allocating dollars, just because I think the economic story is clear, liquidity is very good. There's still a lot of good places to put money to work, given where earnings growth is broadening and the fact that the average stock in the overall market just hasn't performed anywhere near what the fundamentals should be suggesting. But I think there's also opportunities, countries like Japan, which have been an overweight for me this year. It certainly was painful for the past couple of weeks with the drawdown, but the fundamental story that is there hasn't really changed. I think Japan, knowing what you own and that quality bias is going to be really, really important. Maybe you don't own as many banks because the BOJ is not going to hike rates as quickly or as much as I think some investors may have been expecting. But the fundamentals of the Tokyo Stock Exchange, basically having companies that are low valuations, implement shareholder reforms, more equity ownership by domestic investors, that's still a positive tailwind. So, $60 goes to the US, $30 probably goes to Japan. And then the rest of that, I think India is certainly still a very, very appealing place. I mean, when you're looking at a global economy that's normalizing, starting to slow down, that's not the case in India. And I know a lot of clients complain about valuations in India in general, but I think the growth justifies it. And earnings growth is growing at 16, 19, 20% in India, which is almost double that of what you're getting in the US. So I think there's some very clear fundamental stories that exist in India that justify valuations. So it's still very, very attractive to me. And it's very under-owned by overseas investors.
All right. Hi, Matt. Always good to hear your thoughts. You're clearly sounding very bullish on India. And fundamentally, there are a lot of stocks as well that are well placed here, particularly the large cap names. In the past, you've spoken about stocks like ICICI Bank, Coal India, Mahindra & Mahindra. What's the top 2-3 bets you're taking here in India?
So I think given the pullback that we've seen in Mahindra & Mahindra, I think it's a decent time to reload or put some money to work if you feel like you've missed it. I think the launch of Thar Rocks is certainly attractive, and I think just the volume gains they plan to get through the whole lineup looks good. I know passenger vehicles overall is not really the hot place to be in the Indian market right now, but I think their market share coupled with the farm implements business gaining market share in the tractor segment, that's very attractive. It's accretive to earnings, and I think they've continued to surprise to the upside. So definitely a name that I would be using weakness opportunistically. I think as well a name that's fallen that also looks attractive right now is Hindustan Aeronautics. The global defense theme is one that applies. I like defense companies everywhere around the world, but Hindustan, I think, is particularly well positioned, just given the modernization that's happening in India, the fact that they're trying to go both with the domestic market and increasing exports, and they've delivered on the earnings front and on the margin front. So to me, I think using that downside looks attractive right now too. So definitely a good opportunity there.
Okay, so Matt, just a quick last word. You said most of the capital, a majority of it will still go to the United States. India looks appealing. Japan is still attractive, barring the banks. But say for the next 2 or 3 months, because now we're entering into a regime shift with lower interest rates coming in from the US market. So from a 2 to 3 year point of view, with the entire shift in the investing landscape, with the macro backdrop changing, how would you approach? Would it still be the same allocation to equity classes that you earlier highlighted?
Yeah, Rima, that is a fantastic question because it's something I was actually just having a conversation with a client with yesterday. And this goes to the fact of why I think emerging markets can be more attractive and over the longer term, why I think India is a strong beneficiary of that change, because as rates come down in the US, as the dollar weakens a little bit more, emerging markets become more attractive. And we're at 10-year lows with respect to EM allocations across global funds. So if you extrapolate that and you start to see just a little bit of an increase with the decreased weight of China in EM indices, increasing weight of India due to strong fundamental performance, the math adds up that India just becomes even more attractive as that shift starts to happen. So, if you're looking for growth and you're looking to play the long-term game with respect to regime shift around the world, India is still incredibly well positioned within the emerging market complex.
Okay, all right. Good to hear that, Matt. Thank you for joining in, and I wish you a good rest of it's night for you, and then a good Friday and a good weekend. All right, thank you so much for being with us. Let's quickly move on and get you the equity call of the morning. Harold Vanderlind of HSBC says Indian equities are hot. However, he adds after 13 out of 15 years of gains and trading at lofty valuations, they ask what can go wrong. He identifies 10 risks that could potentially derail the rally, and they are stress for banks increasing. Banks are struggling to grow deposits. Private sector capex is sluggish and weak, and concentrated foreign investment, unequal consumer growth, risks to earnings, ESG, and sudden changes in regulations. Herald says pose an immediate threat, but in aggregate, they could derail the rally. They are still staying overweight. While they acknowledge the risks, India also has the strongest growth story in emerging markets. So there you go, all the 10 risks that HSBC is looking at, but still remaining overweight.
Well, let's get you some money market views then. Lakshmanan V of Federal Bank says the dollar index recovered marginally with stronger Eurozone PMI data. He says FOMC minutes show the Fed is moving towards a September rate cut, and markets now await guidance from the US Fed Chair Powell's speech at Jackson Hole Symposium later today. He says the Indian rupee is trading near all-time lows, tracking mild declines in most of its Asian peers and sustained dollar demand from local importers. For the coming sessions, he expects the USD INR to trade in a range of 83.8 to 84.15 against the dollar.
Okay, on bonds, Lakshmanan says government bond yields traded marginally lower, tracking US peers, with the 10-year benchmark yield failing to break below 6.85%. He says the US FOMC minutes showed majority of members indicating that a September cut was likely. He says the RBI MPC minutes reiterated the focus on taming inflation while supporting growth. He adds oil prices were steady near $76 a barrel after falling for 4 straight days, as investors worried about the global demand outlook. Lakshmanan says coming sessions could see the 10-year benchmark bond yield trade in a range of 6.8 to 6.9%.
So we've got a lot of stocks to track for you today. We get to that list in just a bit. But for the time being, let's run you through what all we're looking at. We're looking at RailTel, PowerMech, PDS Limited, Jammu and Kashmir Bank, Poly Medicare, Eris Life Sciences, as well as Kalyan Jewellers. All of them will be reacting to positive news flow on the flip side. Ambuja, Nykaa, PNB Housing Finance will be reacting to negative news flow.
Okay, well, that's our list. We'll get to it in just a minute after a quick break. Back with that in a moment. Good morning and welcome back. We've been telling you the cues. The cues are a little cautious as far as the global setup is concerned, which is why the implied opener is telling us that maybe we'll be off to a slightly flat start. The color across most Asian screens is red for the time being. But we've told you about the macros. It is time to boil this down to the micros and discuss our top stock list to watch today. And we have the team standing by for that. So, Nigel, you kick it off because I guess Ambuja is going to be in focus. Expecting some blocks today?
Well, that's right. We are at CNBC-TV18, the team, particularly Sudarshan and team, they've been on top of this. And we told you that there's a high probability, and Nimesh as well had mentioned that there's a possibility that a large trade takes place in the next few days. And that's precisely what we're picking up. Now, the promoter entity of Ambuja Cements could be looking at selling closer on 2.8% odd. The total block size will be roughly around 4,200 crores, and it's priced at a base price of around 600 rupees per share, which is a 5% discount. If you pull up yesterday's intraday chart as well, the stock did end a little bit lower, but in the final 10 minutes, there was a big surge that we saw in the stock if you pull up the intraday chart. To give you a couple of alerts, well, the promoter entity, 2 years ago, that's in 2022, they had taken some warrants, which they have gradually been converting. And because of this conversion, the promoter stake in the company has moved from around 63% to around 70%. So once this block gets cleared out, it'll be interesting to see the kind of appetite we see for the stock because it's a large cap name. It has its focus on cost cutting measures as well. And I believe demand is quite good as well. So expect the stock to open up in the red. But from there, I think we could see some bit of buying. So let's see how that goes. But Vivek as well is joining in to tell us about Nykaa. Morning, Vivek.
Well, good morning. It's another block deal that we are tracking. So Nykaa, we understand from our sources, we accessed the term sheet last evening. A pre-IPO investor, Harpinder Pal Singh, as well as the associates are looking to sell up to 1.4% stake in the company. The floor price for this particular block deal is at 198 rupees a share. So the size of the block at this particular floor price works out to over 800 crore rupees. Now remember, Harpinder Singh held close to 6.4% stake in the company at the end of Q1, and also there will be a lock-in of further 45 days on sale of shares if they want to sell further. Going with the red on this particular name on the back of this particular overhang.
Thank you very much for that. The stock is up 20% this year and 55% in the last 1 year. But over now to Vamakshi for more stocks which are in the news. Vamakshi.
Well, good morning, Reema. Let me first start off with RailTel Corp, where the company has received work orders worth 53 crores from Uttar Pradesh Police Recruitment and Promotion Board. So on the back of this, going with the green for this counter. PowerMech 2 is expected to open higher today, and that is because the board has approved issue of bonus shares in the ratio 1:1. That is 1 bonus share for every 1 share held. They've also gone ahead and fixed September 28th as the record date for entitlement of the bonus shares. PDS Limited also on our radar, and that is because a QIP opened yesterday. They've approved a floor price of 563.59 per share, which is coming in at a discount of nearly 3% to the closing price yesterday. JNK Bank also on our radar, and that is because the long-term issuer rating and Basel III compliant Tier 2 bonds rating has been upgraded from IND A+ to IND AA-. This bodes well from a cost of funds perspective, and that is why I'm going with the green for this counter as well. And lastly, let's focus in on Poly Medicure. The company recently raised 1,000 crores via QIP, and the shares have been allotted to Lighthouse India Fund, SBI MF, Nomura Funds, as well as Quant MF, among some others. So given those notable names entering Poly Medicure, going with the green for this counter as well.
Okay, all right. Vamakshi, thanks so much. We will put all of them on our list of stocks to watch. Back to Vivek. Vivek, let's talk about yesterday's star, right? What a glittering performance by Kalyan on the back of the deal. So we have the confirmations now. Tell us more.
Well, absolutely right. What a strong move Kalyan Jewellers saw yesterday. So let's just break down, the deal itself. Number one, Heidel Investments, Warburg Pincus, so now, which held close to 9.17% stake at the end of Q1, has gone ahead and expressed its intent to sell the entire stake. In yesterday's block deal data, you actually saw a little over 7% stake getting exited. So now what, the official notification has come to the exchange is that the promoter group will be picking up close to 2.36% stake from Warburg Pincus at 535 rupees a share, and this particular deal is expected to close soon. In yesterday's block data, the 7% stake was sold at 539 rupees a share, and amongst the top buyers yesterday, you saw HSBC Mutual Fund, you saw Invesco Mutual Fund, Motilal Oswal Fund, as well as Sundaram Mutual Fund. So expect the up move to continue because this is a clean out trade from a pre-investor, which was the overhang on the stock.
Okay, at a time when we've only seen promoters and promoters sell stake in the listed universe. In fact, so far this year, promoters have sold 1 lakh crore rupees, according to data which has been compiled by one of the pink papers. It's good to see that promoters of Kalyan Jewellers have gone out there and purchased stake in the company. But let's get to some more stocks that we are tracking. Vivek, it's still with you for Eris Life and PNB Housing.
Well, more block deals that we saw in yesterday's trading session. First on our list is Eris Life Sciences. So even here, private equity investor Chris Capital, which held stake in the company under Emerald Investments, sold the entire 7.2% stake yesterday at 1,201 rupees a share. The good part is, Infinity Partners picked up the entire stake in yesterday's block deal. The other stock on the radar is PNB Housing. Remember, even day before yesterday, you saw a very large block deal where General Atlantic P sold close to 5.13% stake. So they exited completely. Yesterday, Asia Investments Fund, Mauritius, they sold a 3% out of the total 5.19% stake that they held in the company. Amongst the top buyers was Government of Singapore. They picked up 0.6% stake. Now, the other names are not yet disclosed. But on the back of this, given the fact that they continue to hold some stake, going with a red because there is a slight overhang on further sale of shares.
Okay, all right, Vivek, thanks so much. So let's quickly recap our list of stocks to watch today. The ones that have positive news around them are Railtel, Powermech, PDS Limited, Jammu and Kashmir Bank, Poly Medicure, Eris Life Sciences and Kalyan Jewellers. The ones that have negative news flow around them are Ambuja Cements, Nykaa and PNB Housing Finance. All right, with that, let's quickly move on. Another important development and a culmination of a long saga, so to speak. Adani Power has finally received the NCLT approval for the acquisition of Lanco Power. We have Lata joining in with the details. Lata, good to have you in the studios. Good morning to you. So I remember we've been tracking this. You've been talking about this right from the time Lanco went into bankruptcy, right? So what are the final details?
Well, it's very clear that power has now become a profitable sector. So deals are getting done. But to stick to the deal at hand, Lanco Amarkantak was in the NCLT, and the Adani Power bid has been declared the winner. The Adanis are paying 4,101 crore against an admitted set of claims of 631 crore. So it's quite clearly a very good deal for the Adanis, and the press release also shows that the amount of revenues in the last 3 years itself is 4,000 crores from the Lanco plant. But who will get this 4,101 crores? The earlier people who had lent to the Lanco power plant. These are PFC, which had 20.1% of the share of the loan, so it should logically get 800 crore. REC 20% of the loan, 800 crores. IDBI 10% of the loan, so 400 crores. IOB 344 crores. Axis 340 crores. PNB 287 crores. LIC 279. Bank of India 180 crore. And a few other banks like Canara Bank, Indian Bank, and even the Edelweiss ARC. Most of these banks, I think all of them, have written off their bad loans. So this goes directly to the profit. And that could be a benefit. But I must admit that I got this from an old Lanco website, the claims that were admitted against it. So the veracity is as per the veracity of that website.
Thank you very much for that. Now let's go across to Manisha for a complete roundup of all the action from the commodity markets overnight. Manisha, what happened while we were sleeping?
Well, we have seen the dollar index gain while we were sleeping, and this is absolutely ahead of the Fed Chair Powell's speech at Jackson Hole today. So the strength in US dollar clearly seems to be weighing onto the dollar. we have seen many of those commodities see a bit of a decline as well. Well, investors have locked in profits from recent gains when it comes to metals. So whether it's precious metals like gold and silver, we've seen gold decline 1% overnight, silver fell 2%. It's a similar situation for copper, zinc, aluminum, steel. Many of these metals, which saw very strong gains in the matter of last 8 or 10 trading sessions, have seen a bit of a profit taking coming in. Clearly, all eyes on the Jackson Hole meeting today. The only couple of areas that I see gains come in is one, the crude oil prices. This is gained because the U.S. inventories have declined and the ceasefire talks really seem to be fizzling out. The other area is the coal prices. The futures in the international markets are now trading at an 8-month highs onto this one. This is also because there is stronger demand and the IEA statement saying that there is expected a stable coal consumption in the next 2 to 3 years despite renewable energy expansion as well. So these 2 to 3 commodities doing well, but apart from everything, everything else has seen decline in volumes, decline in interest, and a bit of a decline in prices also.
Okay, all right, Manisha, thanks a lot for that. Well, for the time being, we'll slip into a short break. On the other side, we'll have Siddharth Khemka, the head retail research at Motilal Oswal Financial Services, who'll get into further fundamental analysis on all the stocks we discussed. Don't go anywhere. Well, all later on, we'll also have a conversation lined up with Kaushal Parekh, the CFO at Metro Brands, to discuss their business outlook. Stay tuned. Welcome back. Here tuned into Bazaar Morning Call. Well, as promised, let's get in Sid Khemka, head retail research at Motilal Oswal Financial Services, who joins us on the show. Hi, Sid. Happy Friday, and hoping it's going to be a fairly okay trading session, and then we get off to the weekend. Let's discuss a few stocks. Ambuja Cements. The street is going to be looking forward to this large trade that will take place, where the promoter entity, according to sources, is likely to sell 2.8% stake. What's your view on this? Some part of the street is a little bit cautious. They converted shares at around 420 rupees, and now they're looking to sell some shares. But the other part of the street says, well, that's par for the course because they need to deleverage the parent. Your take?
Yeah, good morning, Nigel. Happy Friday to you as well. So I think, yes, as part of the ongoing process where we have seen a lot of managements coming out and kind of reducing their stake, taking in benefit of the bull market that we are currently on, and definitely helping the parentage to deleverage. So overall, if you look at Ambuja from a pure numbers perspective, Q1 was marginally weak. But what we like about Ambuja is that there is a continuous focus on reducing costs to increasing the green power share, logistics optimization, lead distance reduction. And overall, if you look at that, should lead to improvement in profitability. Also, we like the value accretive acquisitions that they have done and the overall ambitious organic plus inorganic expansion plans. So we have a positive view on Ambuja with a buy rating and a target price of 800. We believe any fall in this stock because of the block deals, 5% discount is what the block is at. If the stock falls to that level, it would be a good entry opportunity for investors to get into a cement company which is preparing for the long haul.
Siddharth, hi, morning. What about Kalyan Jewellers? Now, there was a lot of skepticism, right? That even though many things are going right for Kalyan Jewellers, people were watching the stock price, the valuations and saying, hey, has it gone up too much? It's up 400% in the last 15 months. But now that the promoters have come out and purchased stake, about a 2.5% stake at these high valuations after the run-up, it's reinforced confidence in the mind of investors. Would you go out there and buy Kalyan Jewellers?
Yeah, Rima, good morning. So I think it's the same case that we were seeing a repeat of what Titan did for past so many years. A company with a very strong growth trajectory definitely commands a premium valuation. And now with the promoters willing to buy at these levels, this is reverse of what we have seen across the street where promoters are reducing stake and taking in the benefit of the bull market. So definitely gives a shot in the arm for Kalyan Jewellers. What we are expecting is a steady, if you look at in terms of earnings growth, 45% earnings growth for this year and another 35% growth for next year. A very strong growth, far outperforming the market leader Titan. So we also see that it is one of the larger retail chains in India, and the gradual shift towards nationalized players, organized players in jewelry, that trend continues, and Kalyan is a key beneficiary of that. It has a network of 217 stores across, and with that kind of growth and foreign and the promoter buying in, we definitely have a positive view there. Buy rating with a target price of 650.
650 on Kalyan Jewellers. Okay, Siddharth got that. Hi, morning. Since we're talking consumer, let's talk about the other hot consumer stocks. Nykaa as well as Zomato. There's so much going on. I mean, Nykaa, maybe we'll see a block trade today, so some more supply in the market. Zomato, we all know the story. Now they'll be in the ticketing business. Your thoughts and, whether you still see upside on the stocks from where we are?
Yeah, should be. So I think Nykaa came out with good numbers, Q1 numbers, and after that, there was some of the interest in the stock came back. We are seeing that across some of these new age, you can say, the e-commerce companies, with improvement in profitability, there has been a lot of interest. Our pick in that space has been Zomato, continues to do very well in the core food delivery business, very strong growth in the quick commerce business. And now with this acquisition, we believe that it is only going to solidify its overall offerings of a lifestyle kind of a offering where you have food, you have quick commerce, and now you can also offer the entertainment, the going out, the likes of. So it will be a competition to Book My Show, and we believe this is a good acquisition, and the acquisition will be completed by Q2 of the current financial year. So overall, while the valuation might be a bit stressed, but we continue to be positive on Zomato. We have a target price of 300 on there and a buy rating.
Yeah, all right. Very quickly, Sid, before we let you go, I was reading a Jefferies note, and they're talking about Ola in the two-wheeler EV space. They seem to have lost a little bit of market share. What's your view on this? The stock is no longer the 70, 75 rupees that we thought it would be at. It's at around 130 plus. Your view, very quickly.
Yeah, Nigel. So I think the street is definitely excited about the two-wheeler EV space. The penetration is good, and the expectation that this will be one segment where the EV penetration will be much faster. And rightly so, there are others who are the old war horses of the two-wheeler companies have got in with the likes of Hero with its Vida, Bajaj Auto, TVS Motors, they're all getting into the space. So I think this space will get even hotter competition going forward. What we like within the space right now is TVS Motors, which has gained a significant share in the two-wheeler space, and we believe that could continue to do well for TVS Motors. Among the older ones, between the Hero, Bajaj and TVS, we believe TVS has gained a significant share, and that could drive growth for the overall company.
Okay, all right. Good to have you on, Siddharth. Thanks very much for joining, and you have a good day and then a good weekend. With that, let's move ahead. The second half of FY25 will be very strong. That's the word coming in from Metro Brands CFO Kaushal Parekh. Despite a year of muted consumer demand, the company remains quite optimistic on the way ahead. In an exclusive conversation with our colleague Shilpa Ranipeta on the sidelines of the RAI Retail CFO Summit, he added that the company has big plans for the sports and athleisure segment. Take a look.
As we guided in our earnings call, we have seen overall customer sentiment sort of, coming back. In fact, for us, even in Q1, products above 3,000 rupees, which we classify as premium, we saw the percentage of that increasing from 49% to 54%. So that undercurrent in terms of customer shopping behavior is there. We strongly feel H2 would be very strong for this financial year, and that's how for the year as a whole, we should hit that 12 to 15% overall sales CAGR.
I think casualization was the biggest trend that came out of COVID as well. So currently, is that Metro's main focus, and brands like Fila, are they going to be the growth drivers? And if you could sort of maybe give me a figure or put some number to it as to how big do you see these brands being, say, maybe by the end of FY25?
See, if you see our overall brand portfolio, we have like 7 brands now: Metro, Mochi, Walkway. These are our own brands. Then we have tie-ups with international companies like Crocs and FitFlop, and both these brands have been doing exceptionally well. Our latest acquisition was Fila, that was in 23, and then we tied up with Foot Locker, which is a multi-brand sports and athleisure outlet. So these are the recent ones. Obviously, our endeavor would be to make sure that all our existing format grow, and we see a huge amount of growth opportunity across all our brand formats. So obviously, that is something that we would not want to let go by. So that is something that we would be completely focusing on. As I said, sports and athleisure, we feel is going to be a huge market going forward from here on. You touched upon casualization, right? 10 years back, Metro was broadly a black and brown formal company, and today casual plus sports contributes to more than 60% of whatever we sell. Right. So obviously we always follow what customer wants, and that is where we sort of migrate to. So we'll keep working on all our format and keep growing them. And sports and athleisure is something which we want to set it right for the kind of opportunity that we see going forward. So to answer your question, obviously sports and athleisure, both Fila, Foot Locker will start growing from H2 and FY26 onwards. But along with that, other formats would also grow. Right. So for this formats to become substantial, it would take some amount of time, because we expect all our formats to grow significantly from here on.
Last question with respect to store expansion. Generally, retailers, we saw in the last couple of quarters, given the slowdown, there was a lot of store rationalization that was happening. It always happens, I agree, but then more than usual given the slowdown. And while there is store expansion, the pace of expansion has slowed down. Is Metro looking at store expansion that way, or are you going to continue to go aggressive? And given your focus on the value format also, will most of that happen in tier 2, tier 3 markets? Whenever we sign a store, we sign it for long term, right? It's not for 1 quarter or a year. It is predominantly for 7 to 9 years to sort of come. So we are very cautious whenever we see euphoria in the market. We have been existing since more than 65 years now. So whenever there is euphoria in the market, we would slow down, because you can't sign deals which will come and bite you maybe 2 years down the line, because these are long-term tenure leases. At the same time, when there is overall pessimism in the market, Metro would be most aggressive among the lot. So that has been our philosophy over the years. Having said that, we opened 15 stores in Q1. We have guided for 225 stores over next 2 financial years, excluding any new stores that we open for Fila. We feel extremely comfortable and confident of achieving that numbers. For this financial year, our target would be to touch or exceed 100 stores, and as I said, right, 225 for next 2 financial years. So logically, for next year, we would target somewhere around 125 stores. Yeah. And what about for Fila? What's the store plan there?
Fila, we had clearly defined our strategy, because when you take when you do any acquisition, you have to work over cleansing and getting the integration done properly, right? So as we had defined, FY24 was the year of liquidation. Right. FY25 was the year when we want to reset the brand in India, and we plan to predominantly do that by placing Fila within our MBOs and eventually Foot Locker, which we hope to come in H2 of this financial year. Once we start seeing green shoots in terms of customer accepting our merchandise at the price at which it is offered, we would think of opening exclusive brand outlet for Fila, which most probably should happen in FY26.
Interesting one. Well, when we come back, we'll slip into a short break for now. You come back, we'll focus on the technicals of the market. Mitesh and Shrikant will be joining us. Don't go anywhere.
Welcome back. Most of the Asian markets are lower today. So Kospi, Hang Seng down about 0.5%. The Taiwanese markets have a cut of about 0.75 of a percentage point. The GIFT Nifty for now is suggesting a flattish start, but after 6 days of gains will be run into any kind of profit booking. Investors, remember, may also choose to stay on the sidelines ahead of that all-important Jackson Hole meeting, which will set cues on the global front. But let's take stock of...
I think that 2.7 crore shares that had to change hands with regard to the promoter entity likely being the seller in that particular deal. Well, that's taken place on Ambuja Cements. Now, this is going to be very, very interesting because there were some shorts in the system as well. This block has taken place in pre-opening. So, those shorts could get squeezed out. So, we'll have to see how the stock reacts towards the end of trade. The last 10 minutes, that's telling you the picture. There was a bit of a sniff that maybe this could take place in pre-open. And that's precisely what's happened. So, those shorts get squeezed out now. And let's see how the stock reacts. In all probability, it'll open up, gap up, because those shorts are stuck in the system. The deal pricing we'll wait by, but we understand that it was likely to take place closer to around 600 rupees per share. In fact, Ambuja Cements is going to be the one in focus, and as the promoter entity is looking to sell stake. In fact, I quizzed the CFO, Mr. Vinod Beheti, on the same. Let's hear out what he had to tell me just 2 days ago at the Motilal Oswal conference. There is this rumor or this buzz that the promoter entity, after increasing stake in the company, that's Adani, they could be looking at going ahead and maybe selling some stake. There is some buzz in the market, so I wanted you to clear the air on that. Either ACC or Ambuja. Ambuja is where the buzz is, that there is potentially a large block. You want to deny it? You want to confirm it? Is that a possibility?
Well, I would not comment anything on that because that will be directly looked upon by the family office. So at the business level, at Ambuja, ACC and Sanghi level, I would be able to answer all your questions.
So I should not take that as a denial or a confirmation.
I would say that I'm not aware of it, and there would be appropriate people to answer that.
Well, a large trade of more than 2 crore shares has also happened in the block window for Nykaa. That's about 0.7% of the equity. Vivek had learned from sources that one of the investors, he's not a promoter, group entity, but Mr. Harinder Pal Singh is likely to sell a 1.4% stake in Nykaa. In the block deal window in pre-open, we've seen about 0.7% of the equity change hands. But back to tracking the market technicals for today's trading session. Mitesh and Shrikant Chauhan of Kotak Securities are with us on the show. Gentlemen, morning. Thank you for joining in. Mitesh, you go first. How do you see the trade pan out?
Good morning. So, we've been maintaining a positive stance for the last couple of days, and now I think the Nifty is heading towards that first gap area which happened on the 2nd of August. I think around this 24,850-900 mark, you will see a lot of supply emerge. So in that sense, the Nifty might be slightly subdued at higher levels. You will see some profit booking happening. What I would want to keep a watch upon, and I've been stressing on this point for the last 3-4 days, is the Bank Nifty sustaining above 51,000. Yesterday also we did try and got past the 51,000 level on an intraday basis, but it was only by 50 points and we didn't get a closing on the 2-hourly chart. So I think if that can happen, then the Bank Nifty possibly could be an interesting trade. So buy above if it closes above 51,000 for about half an hour and keep a 150 point stop loss. Look for 51,450, 400 as the first target area, though 51,800 is my eventual target in the short term.
All right, got that. Mitesh, stay on. We'll just come back to you. Shrikant Chauhan is also with us. Shrikant, hi, morning. How are you looking at things? What's the setup like?
Yeah, good morning, Surabhi. Good morning, everyone. I think, we are again back at the same levels. And at 25,000 when the market was there some few days back, that time also there was confusion that how the Fed will go for cutting its interest rates and whether the US is going into recession or not. So we are again at same levels until this particular uncertainty is not getting clear. We are going to see the market in a range. And at these levels, we are seeing some cautious sort of activity. So I'm of the view that in case if there is any correction in today's date, then close to 24,750, 24,700, the market is having excellent support. So close to those levels, we should look for taking some long bets. We can keep stop loss at 24,600 because now the supports have shifted from 24,400 to 24,600 levels. Similarly, for the Bank Nifty, there also we are seeing shifting of supports to 50,300 levels. And during the day, if we see any correction close to 50,700 levels, then there we should look for taking long bets. But yes, broadly, I am of the view that we should look for taking bets if there is any correction in the market.
Okay, got it. Let's also talk about stocks then. Mitesh, what is your list looking like? What will you go with today?
Morning, Sulbi. I have more of buy calls today. The first one is a buy on Tata Consumer with a stop at 1184 for targets of 1250. A buy on Indian Hotels. Here I would recommend a stop at 630 and look for targets of 680. And IDFC First Bank, the stock has corrected a lot and now is showing first signs of reversal. So let's see if it can get back to about levels of 81, 82. That's the target, and stop loss here should be about 73.5. One sell call, that's IGL. Keep a stop at 551.5. Look for declines to about 520 levels.
Okay, 3 buys, 1 sell for Mitesh. Shrikant, what do you have on your plate today?
So I would like to go with a few pharma companies. There we are seeing good amount of buying attraction. In that we like Biocon, we like Natco. But on Thursday, we saw some specific buying interest in Apollo Hospital, which is currently around 68.30, 68.40 levels. And it is very close to its previous all-time highest level. So from here, the stock can move to the levels of 7,000, 7,050. That's the overall view. So it's a buy at current levels with a stop loss close to 6,780. And the other stock which we like is CESC, Kolkata Electric Supply, which is currently trading at 194, 193 levels. And it is also very close to its breakout level. So from here, the next level to watch out for would be 205. We can keep stop loss around 187.
Okay, all right, gentlemen, thanks very much for the calls. We'll come back to you a little later. Right now, a quick break. And then we'll look at the pre-opening trades, which will be kicking off at 9 o'clock. Also with us would be Mangesh Bhadang of Centrum Broking. Let's focus on the cement space and, of course, the big block that we've seen in Ambuja Cements and the outlook ahead for the company.
Welcome back. The first rate from the pre-opening sessions have come in and it's in the green, but we'll wait for it to settle down. The Nifty right now is showing a pop of close to about 0.5%. Avni Bhatt, Senior VP, Equity Derivatives Research at JM Financial Services is now with us on the show. Avni, it's been very sideways for a market and we've just been trading in a tight, narrow band of about 80 to 120, 30 points for the last couple of days. Are you sensing a bigger move coming through on the indices, and what would the trade be?
Good morning, everyone. Very good morning to all the viewers as well. So yes, definitely what gives me comfort is the fall in India VIX. It has come down to almost 13%, and that's a very comforting factor. So although the move is slow, the bullish trend continues, and we believe that it's just about a waiting game. When the breakout happens and we see Nifty and Bank Nifty scale higher from here on, from current levels also. So as far as levels are concerned, I think 24,960 is one area where we had seen the first gap down opening on Nifty, and that will be a resistance level. Once that is crossed, 25,000 is just going to be a psychological resistance. We should be seeing Nifty going up to around 25,200. Support base is forming well at around 24,650 and 24,500 levels. And similarly on Bank Nifty, 51,100 is a very crucial level. And in case if we see a close between 51,000 to 51,100, then the bullish momentum will continue next week up to around 52,000. Support base has come up to a good level of 50,300. And intraday supports today are at around 50,700. So any dip close to these support levels, we should be using it as a buying opportunity.
All right, Avni, you got a couple of stocks as well for us?
Yes, definitely. So, Nigel, the first stock that I would like to go for is Godrej Consumer Products. After a decent correction from 1,500 to 1,360, stock underwent a good consolidation, and as on yesterday, after 8 days of trading below the short-term moving averages, it bounced back and closed above both the 50-day and the 20-day exponential moving averages. Volumes were good. Open interest addition of almost 7% plus were seen in futures. So I think the stock is ripe to move higher up to around 15-20 levels. So I would recommend a buy in this particular stock. The first target would be 1480. I wouldn't say target, it's just a resistance level where it may consolidate for some time and then move up to the ultimate target of 1520. And since our view is pretty bullish on the banking sector, I would like to go for one of the banking stocks, which is ICICI Bank. So after nearly 12 days of consolidation and sideways price action, below the short-term moving averages, the stock has shown some green shoots of reversal by closing above the 20-day exponential moving average. So ICICI Bank also, futures also witnessed around 2.2% addition and also a surge in delivery volumes. So ICICI Bank becomes a good buy today in case if we see some dip close to around 1180, it will be a very good buying opportunity for a target of 1250 on the upside and keeping a stop loss of 1158.
Thanks a lot, Avni, for joining in and giving us your take on the index as well as both those two stocks, Godrej Consumer as well as ICICI Bank. But let's focus on the cement space. And to help us out, we have Mangesh Badang, the Senior Vice President Research at Centrum Broking. Hi, Mangesh. Good morning and good to see you in as always. Mangesh, a couple of days ago, we had asked the CFO of Ambuja Cements about this possible block trade, and it's in fact taken place. And sources indicate that in all probability, it will be the promoter entity that's sold. What's your view? Because some part of the street was a little bit cautious. They converted those warrants at 420. They're looking to sell some stake at more than 600 rupees odd. Give and take everything. Your view on Ambuja Cements from these levels.
Yeah. Good morning, Nigel. And as always, thanks for having me. Any stake sale by promoters at higher levels is always looked at, in fact, it is not looked at very positively by the markets. But given the way things are, we have seen so many deals happening. I think the overall impact on the stock has been limited in most of the times. I think yesterday the announcement was, or the understanding was, the deal will happen at 5% discount to market price, which was a very surprising thing. But I think that as the deals have just gone through, I think it has happened at around 625. So, at least on that pricing front, it is slightly higher than what the earlier estimate was. So if you look at this overall view in terms of how the deal has happened, what we see is that the promoter entity is actually trying to reduce some of the debt burden that they would have, and that would be looked at over a longer term. I think that is a wise thing to do for them. There is definitely this thing that they had taken the preferential warrants at 419 rupees. But if you look at the time and the amount of money that they raised through deal, and that has been utilized by the company, so that money went into the company, and this is from the market they are taking this up. So I don't see too much wrong in it, and in terms of our view, we have a positive view on the stock.
Okay, you have a positive view out there. Mangesh, earlier today we had made this point as well. As per what feedback suggested is that there was fair bit of demand out there, and if it takes place in the block window, then those shorts will have to scramble for cover, and that's why in pre-open, if we see, the stock is likely to open up, gap up with close to 3% because those shorts are going to get squeezed out. That aside, you're positive on Ambuja Cement. Just a quick question. They have been talking about growing volumes, cost cutting as well. And they also hinted that maybe in the next few years, there could be one listed entity, Adani Cement, with all the companies, part of the same group. What is your view? They've already been talking about synergy benefits. Will this still add something? If yes, could you quantify it?
Most of the synergy benefits in terms of cost reductions or OPEX front are largely in place. They are working out of the same office. I think the merger over a longer term would benefit in terms of creating a larger entity. So going to the capital markets or raising debt in future, that becomes easier. Secondly, the dealers and everyone, for all of them, all the other entities that the company deals with, if they have a single entity, I think it becomes much easier. I think that was probably the way, and a lot of these common administrative works will go with. So that is something that probably should be at the back of their mind. They have Sanghi, which is also a listed entity, as well as ACC. So having three listed cement entities for one business doesn't make sense. and that's why they would go for this merger. Having said that, there are certain cost elements that one needs to look at. Those are the stamp duty when you transfer the mines, when you consolidate the entities.
Okay, all right. So in operational performance, it will be a smaller, smaller saving is what we could look at.
Yes.
Got it. Mangesh, the other burning question is whether or not a price hike can finally be absorbed. All through the week, various brokerages are saying that it's been hiked by 10, 15, 20 rupees. I also asked Ambuja Cement CFO. He said these are par for the course. Nothing big is going to happen till the monsoon, gets over. But what's your feedback? I understand that 10 to 20 rupees was what they tried to push through. How much of it has been absorbed according to you?
Yeah, so early days in terms of assuming, in terms of how much it has been absorbed till now. So South and East are the two key regions wherein, I believe that price hike is needed. Because the kind of prices prevailing right now, it is very difficult to generate a relatively higher EBITDA per ton for there. So this would be like, I would call it as a recovery instead of a price hike. So even if there is a 10 to 15 rupees price hike, I don't see that your profitability is going to be higher than what they delivered in the first quarter. So I think this is something which is necessary, which the industry is trying to get it through. If it sustains for 6-7 more days, I think that is something that is need to be watched out for. But in my opinion, it has not gone through in South.
Got it. Very quickly, your top buy and sell calls from the cement pack.
Yeah, so we have a buy on Ambuja and Birla Corp. And third one I would like to add is Nuvoco Vistas. So the rest we have a neutral or sell rating, and in terms of specific stocks, I think I would say Heidelberg, Ramco, and Star based on either valuations or balance sheet issues. We have a sell or a neutral.
Okay, all right, got that helpful conversation. Thanks very much, Mangesh, for putting things in perspective. By the way, both the major stocks in focus today, Nykaa and Ambuja, in which these large trades have happened, both are up and about. And that's telling you the market's mood, right? If the business is good and if there's supply coming in through the block, whoever is selling, even if the promoter is selling, the market's willing to lap up that supply. It's a very different kind of a market that we're in. Block trades are no longer seen as a big negative, cast in stone. It really depends on business to business and the stock positioning. Anyway, speaking of positioning, let's look at the Nifty in the pre-open. About 33 points higher, not too bad. Some of the stocks on the upside include Hindalco, Grasim, Bajaj Auto. So these are the gainers. By the way, Reliance is working well because some of the brokerage notes that are, looking at Jio after looking at the annual report, they're pointing towards some more upsides perhaps, and reading through the details quite positively. So that Jio impact on Reliance seems to be working well. 3,000 is the price as we see it. Let's quickly go across and get our technical calls going. We have Mitesh back with us. Mitesh, 910, which stock will you go with?
Yeah. Sorry. I'll go with the long on Indian Hotels for targets of around 680.
Okay, Indian Hotels on your radar. Nimesh is now with us for the standout brokerage report of the day. Nimesh.
Hi, morning, Rima. Today's standout is on two-wheelers. Interestingly, JP Morgan has today upgraded TVS Motors to overweight from neutral, and they've raised the target price to 3050. Even UBS has today put out a note on TVS Motors, and they've also raised the target price to 3200. JP Morgan has also raised the target price in Bajaj Auto to 11,225. They have an overweight stance on Bajaj Auto as well. Interestingly, they have downgraded Hero Motors to neutral now, and they have a target price of 5230. And their caution on Eicher Motors with a neutral rating and a target price of 4510. Now, on the overall two-wheeler industry, JP Morgan believes, and they say that they are more attractive segment. Two-wheeler is a more attractive segment within the auto space. They expect two-wheeler growth to be much faster than the PV growth. Electrification has picked up, but it's at a very gradual pace. So they do not expect any margin pressures for the incumbents, at least in the near term. And for TVS, they believe that the market share gain is going to continue. And on back of that, they've raised the EPS estimates for FY26, FY27 by almost 5 to 18%. For Bajaj Auto, JP Morgan believes that it's a potent combination of ability and intent. So they've raised the EPS estimates by 3 to 5%. A good note on the two-wheelers with upgrade on both TVS Motors and a target price rise on Bajaj Auto by JP Morgan.
On TVS Motors, they see a 10% upside from current levels. Currently, TVS is at 2760 in pre-open, and their target price is at 3,050. But another big mover in the large cap space is Reliance Industries. Potentially, Reliance Industries has opened in the green in pre-opening. Here, Bernstein today has raised the target price to 3,440. This is ahead of the AGM, which is on the 29th. That's next week. The company had released the annual report. So based on their study of the annual report, Bernstein has raised the target price to 3,440, outperform rating. Bullish on Jio. So they've gone ahead and raised the target multiple for the Jio business because Jio is focusing on monetization now that the 5G rollout is completed. And recently you had that big tariff hike which Jio itself had initiated. So they're expecting a 16% revenue growth for Jio over the next 3 years. EBITDA margin growth should be about 20%. They expect market shares gains to continue as the subscriber base crosses 500 million subscribers, and they expect Jio to command 47% of the revenue share by FY25. FY25. CLSA too is bullish on Reliance Industries. Their target price is 3,300. They also concur the next leg of growth will come in from 5G monetization and the broadband ramp up for Reliance Jio.
Okay, so Reliance in focus. Reliance is definitely looking like it will start on the optimistic side, about 0.5% up on Reliance Industries. By the way, the stocks that Nimesh was just highlighting in in that standout brokerage, the JPM note on two-wheelers, both those stocks that JPM is liking, Bajaj as well as TVS Motors, both are up, and the rub-off is already seen in the pre-open. TVS is up about 2% and Bajaj is up about 0.5%. Remember, Bajaj, I mean, there are the other stories as well, the source-based information that we got you yesterday, that Bajaj perhaps is going to get the PLI approval for all of its products. It's also trying to convince the GST council to look at a GST rationalization or reduction basically on EV two-wheelers. That, of course, is good for the entire industry. But anyway, I mean, these are some of the other news points surrounding Bajaj, and most of them have been taken quite favorably by the market. Just about 4 seconds to go. So about a 30-point pop is what we are getting at the start. Off we go. So let's look at the movers and shakers. On the upside, Hindalco, Grasim and Bajaj Auto. These are the top 3 winners on the Nifty. By the way, we started with that 30-point, but within the first take, I mean, there's a bit of a sell-off as well. The Nifty is now up only about 9 to 10 points. So the global overhang and caution ahead of Jackson Hole seems to be kind of weighing in as we get into the first couple of minutes. So what is pulling the market on the downside? I can see Infosys and TCS straight away. So these are your big ones that are not on the positive side of the screen. Some of the bigger banks, Axis, Kotak Mahindra on the downside as well. HDFC Bank is lower by about 0.25%. So basically IT and banking not very hot as we start things off. Bank Nifty is about 60 points lower, but it's also flipping very quickly. So let's see. But yes, IT and banks, 2 watch points. Right now, the mood is a little cautious around both of these. But some of the auto names, along with Bajaj Auto, Tata Motors on the upside as well. There is some buying in Reliance, like we've been discussing, 0.5% up. So it's fairly split and absolutely flat on the Nifty to begin with.
Well, that's right. You know, a few stocks that are in focus. Maybe Ola Electric is reacting to that note coming from Jefferies, where their market share has tapered down a little bit. So the stock is down close to 2.5%. It's all just had a big run yesterday as well. It came off the high point of the day. So that's one of the movers out there. Jain Irrigation is one of the top volume movers. It's up close to around 5%. So big move is what we are seeing. Maupin Labs continues its uptrend. It's up close to around 3%. They raised some money via the QIP route a couple of weeks or so ago. And from there, the stock has done quite well. Even yesterday, the stock was up and about in trade. Ambuja Cements, that's the one in focus. The shots are getting trapped on the wrong side. The block floor price was at a big discount in comparison to yesterday's close, but the block took place in pre-open. So that's why, you know, the shots are getting squeezed out as we speak. Sadbhav Engineering, yesterday as well, the stock was up 10%. Today as well, it's up close to 9%. So big up move is what we're seeing out there. From the F&O pack, the frontline names that are moving quite well. I think TVS Motors had opened up gap up 3% higher on that one. Crompton is up close to 100%. On the flip side, Deepak Nitrite and Firstsource giving back some part of what they've put on in the last couple of weeks.
Nykaa too is up nearly 3%. Go Digit, I think Jefferies has initiated coverage on Go Digit with a buy call. Citi too says that in the non-life insurance space, Go Digit is one of their preferred picks, and they've put a target price of 425. So that stock opens up with a gain of about 3%. RailTel, small order win of about 52 odd crore, but that pushes the stock up by nearly 3%, and now its year-to-date rally stands about 45%. Kalyan Jewellers continues to see buying. Poly Medicure with the conclusion of that 1,000 crore QIP, and lots of marquee Investors have bought in it. So Poly Medicure has a gain going for itself. Zomato closed in the red yesterday after buying Paytm's ticketing business for about 2,000 crore rupees. But today Zomato has some green, at least in the early morning tick. Sorry, excuse me. Outside of that, you've got an NIIT Limited, which pops up on the volume charts. You've got Raymond, which is up 4.5%. There is news flow surrounding Jain Irrigation, so that's another big mover. Bardhaman Textile. Again, these are stocks which you don't generally see on the volume charts early on in the first few minutes, but these stocks are higher. On the way down, you've got First Source, which continues to correct, I think, second or third day in a row. IEX in the F&O band, so IEX is down nearly 1.5%. And in the frontline space, just keep your eye on HDFC Bank. That's down about 0.2%. HDFC Bank was planning to sell about a 20% stake in HDB Financial, one of its subsidiaries. It's an NBFC to a Japanese company, but it looks like that's hit a bit of a roadblock, according to Pink Papers, and HDFC Bank has opened in the red.
And just some more names to add from the broader market. Senco, 3.5% on the upside. The rub-off continues. And by the way, Kalyan itself on 3.5% after yesterday's 7-8% move. So the jewelers are sparkling. The other name to look out for is Office. Office is this recent listing. The stock's already doubled in the last 2.5-3 months. Yesterday, they announced that they're expanding further in Bengaluru, adding some more space there. The stock was up yesterday. It's building on that momentum this morning, almost 4%, 5% higher on Office as well. So these are some of the early movers. Adani Power, which has finally concluded that transaction with Lanco in the NCLT, getting that approval, about 2% up on that stock as well. TVS Motors, 3.5% higher. So yeah, it's a good morning as far as the broader market goes, but at the headline level, absolutely flat and consolidating for the time being. Andrew Holland, Chief Executive Officer at Avendus Alternate Strategies, is with us on the show this morning. Andrew, great to have you on. Happy Friday to you. So lots to discuss and a lot going on, right? A month can be a very long time, I guess, in this kind of a market, because we started August with this big, scare around the carry trade, the scare around the U.S. economy itself. And now here we are with all eyes on Jackson Hole. The volatility has settled to an extent. But the question is, can the upside continue in the one-track way that the market has gotten almost used to?
Yeah, that's what we're all kind of thinking about, right, in terms of where the market heads from here. So I think there's a few things. One, what will come out from the Jackson Hole meetings today. I think we all kind of working on the basis now that an interest rate cut in September is coming. It's really, is it 25 or 50? The data just suggests that it should be around 25. All that kind of problems you talked about at the beginning of the month have ebbed away, and the economy remains kind of resilient in the US. So that kind of Goldilocks scenario still stands. But I think the markets will continue to worry about is the jobs data showing a bigger slowdown coming, and should the Fed do 50 basis points? Now, I think they should front run the kind of interest rate cycle. I think they should do 50 basis points, albeit that our base case is 25. I think that would give the market that kind of extra fillip that the Fed is ahead of the curve this time. And I think that's the key. The market continues to worry about whether the Fed is behind the curve. And you saw, as well as I did, all those kind of revisions to the jobs data a few days ago. I mean, those are big changes. So I'm not quite sure that the data that they're following is really giving them a good indicator of where the economy is heading. And I think that's what the market will grapple with. So if it's 50, I think markets continue to move higher, not just for globally, but for India too.
Andrew, completely take your point. And guys, just to jog our memories, the revision that Andrew is speaking about, that revision was 818,000 jobs revised downwards. That's what, I was actually a little surprised the market wasn't shaken up yesterday when that number came out. Maybe the impact is playing out with a lag, because that's the biggest revision in US payrolls that we've seen since 2009. I mean, you can revise by a couple of hundred here and there. This was massive, 818,000. So yeah, let's see how it plays out from here.
Well, right now, at least, the Fed CME tool suggests a 25% probability that we will see a 50 basis points rate cut in the September 17th to 18th meeting. Andrew, morning. So what's the best way to construct a portfolio in India now? Because it appears the easy phase of money making is behind. Markets have been consolidating for the last couple of days. There are voices which suggest that mid and small cap, and you're in that camp too, that valuations have just gotten a bit overheated when it comes to the broader market. And it's time now to perhaps focus on, making money, but also preserving capital and, diminishing the kind of risk you take to make that money. So what's the best way to construct a portfolio in India?
Well, I mean, obviously, the way we think about it is that, we continue to play on the themes that we think will, play out over a longer period, because that's where you're going to continue to see the earnings momentum, not just for the next 2 quarters or 3 quarters, but for the next 2 to 3 years. So again, that falls under that defense, renewables, CapEx spending kind of scenario. So I think, as soon as those orders start to be awarded, I think you'll see in the next flip upwards for these share prices. But the other trends which we talked about before, the electronics manufacturing sector, hospitality, and premiumization in beverages, those are themes that are just not going to go away from you over the longer period. So that's how I'd kind of look to construct the kind of more longer term long-only portfolio, and then look for opportunities which the market presents you in terms of you help get the momentum going. So if the interest rate cycle is now starting to fall, it should be good for our banking sector in India if the RBI follows suit. And of course, we'll all be thinking about October at that next interest rate policy meeting, whether we could see a kind of reduction in interest rates here in India. And that would be, I think, the fillip for the banking sector to move the index higher. And it's a big weightage that it's done absolutely nothing for a very long time. So I think whilst our patience is wearing out a little bit for the sector to perform, this could be the catalyst for the sector. So that's a kind of a more longer term, but shorter term kind of catalyst for the banking sector.
All right. Hi, Andrew. Good morning. Good to see you. And as always, and from the banking space, preference would lean towards the private, or you still believe the PSUs have something to offer?
No, I think if you're taking the view that interest rates will fall, that's going to be good for a lot of the banks in terms of their bond holdings and M2M. So that falls both for the private and the PSU bank. So I think if you're playing this, you play the whole sector in the short term, and then see which ones have outperformed, and then do your kind of reallocation between private and PSU banks.
Okay, all right. Since you mentioned defense, renewables, as well as power, what kind of exposure do you all have to the space? Because that's clearly the sector, as you mentioned, there's going to be a lot of capital expenditure, a lot of investor interest out there. But valuations, well, on some of these counters have gone through the roof. Your exposure to these spaces right now, and will you increase?
No, I mean, we've reduced, obviously, because of what you've said. I think the next catalyst, as I mentioned previously, will now be the awarding of more contracts. And I expect that will happen from probably kind of next month onwards to the end of the year. And I think that's going to be the next leg. My concern is always is execution, and that's maybe down the road. But until the order... If orders dry up, that's when I think the valuations will start to fall, because I think execution is always a little bit more difficult. But for the time being, for the next 1 to 2 years, I expect that those orders will continue to flow very strongly into these sectors.
You said you've brought down your exposure to these stocks. By how much?
It depends on the stock, and I obviously can't give a portfolio stance away in terms of individual stocks, but we move around within the themes. Obviously, if you're feeling that some of the themes are not have taken a back seat compared to others, then you can shift across. So hospitality is probably where we're a little bit more excited at the moment.
Okay, Andrew, I wanted to ask you about the two-wheeler space, because suddenly that's getting plenty of attention. TVS has done a new launch. The stock is one of the top gainers today. Ola Electric, did you all participate? Do you have a view out there? What's the preference in the two-wheeler space?
Yeah, individual stocks is all different, but I think in terms of Ola's listing, I think we're all surprised at where the share price is. But it's obviously kind of highlighted some of the undervaluations of the other two-wheeler companies in this sector who also have exposure in the EV sector. So I think if anything, either one share price is telling you that that the overall sector is undervalued, or there's some catch up to do, or the other way around.
Okay, Andrew, just to go back to that point on banks and financials, if you could elaborate on that, because there's this huge debate raging around deposits, right? Whether it's becoming more and more difficult for banks to access that cheap source of funding, and whether margins will come under pressure, because the narrative can be painted in a very bleak way if you're a bear, but you don't seem to think so. So just explain the thought process, and also apart from banks, whether it's capital market related stocks, which have had a great run, whether insurers these days, I mean, they're hitting fresh all-time highs. So what else would you look at in financials, and why?
So I think on the banks, I mean, you're correct. I mean, there's no catalyst for the banking sector because we all know NIMs are under pressure. I mean, there's lots of reports going around at the moment talking about, the age profile of people in the banking deposit system. But there's other products out there, and we talked about this before, like the arbitrage funds, where the yields are higher than you can get in fixed deposits, but you're taxed at a mutual fund taxation, and that's obviously grown very, very, very strongly, and it's taken money away, particularly for those more kind of savvy investors in the markets who can see that these yields are there, and can take daily liquidity or hold it for more than a year. So I think that's part of the problem. Taxation for fixed deposits is a lot higher than other market instruments. So that's a passing phase. Obviously, that will change over time. But what I'm saying is that I think the catalyst has got to be interest rate cycle starting to turn for the banks, which will mean that their bond holdings give you some very huge mark-to-market gains. And obviously, the interest rate environment falling, the economy will start to pick up, and then they can start lending, and deposits will start to continue to grow. So that's the story. I like this story better than like the other stories in terms of insurance or asset management companies. I think they've all had a great run.
Okay, got it. Understood that point. Andrew, great chatting as always. Thank you so much for joining in. You have a good Friday and a good weekend ahead as well. We look forward to the next call soon. Well, speaking of financials, let's focus on one company from that space. Muthoot Finance is the one that we have our eye on. Now, Muthoot reported, a strong growth in assets under management in the first quarter. But there are some issues around asset quality. And then, of course, the larger question is how much more growth, looking at what's happening in the gold markets as well. We have with us Mr. George Alexander Muthoot, MD of Muthoot Finance. Great to have you, sir. Thanks for joining us this morning. So, I want to start right there, because while growth has been phenomenal, and tell us how much of that is just organic growth and how much the impact, because some of your rivals are dealing with regulatory issues. So just tell us that. But I think the bigger question the market has is this deterioration in asset quality. And for the benefit of our viewers, let's just pull up the gross NPA levels data, because at the end of the first quarter, GNPA is now reaching 3.98%. That's almost coming up to 4%. Quite a bit of that is actually because of the MFI business. Let's put up the MFI numbers as well if we can. For Belstar MFI, the gross NPA level has moved to 2.36 versus 1.62 in the previous quarter. So we need to understand, sir, what's happening with asset quality. Is it only MFI? Is it elsewhere? And what can you guide on this?
Okay, thank you and good morning. So we are both on the same track when we say growth is there. We have seen good growth in the assets under management. I'm talking about the gold loan business. The gold loan business, the gold loan growth has been quite good. First quarter, there was a growth of 11% in the gold loan business alone. So that should be a good growth. And we see continued momentum on that in the coming months also, these months also. So we are on track for a good performance this year. So about you are concerned, or rather there were some concerns relating the asset quality. The 3.99 gross NP you see is 99% on the gold loans business, because gold loan constitutes about 80,000 crores The MFI is only 10,000 crores, and the deterioration in the asset quality in the MFI is only 0.3% or 0.4%. That's insignificant. But coming to gold loan, when we say the asset quality, we looked at the numbers here, and the NPA, the amounts of the NPA gold loan, the loan to value is only 54%. So we are fully in the money. Even if you include the interest, we are fully in the money, and not even a rupee of that will be lost. It is just that we give more time to the customer to repay the loan instead of auctioning it. The option for us was when it becomes an NPA, because after 90 days or 1 year, it becomes an NPA. So we are actually helping the customer, rather supporting the customer and probably giving him some more time. So if you give 3 or 4 months time, many of them will come and take back. These loans are not old loans. These are all changing. So every time you see the NPA number, it's a new number. Those you see as NPA now, after 3 months, it becomes closed. It is just that we are supporting the customer.
So understood your point, but I must ask you a little more on this. Now, your provisions have also moved up. So clearly you're sensing, is there no rise in provisions?
The rise in provision is because NPA, whenever there's NPA, we have to show a rise in provision. But
exactly.
Of course, there's a standard asset provision also, because the loan growth has also been 8,000 crores this year. So on that also, there's a standard asset provisioning. So both are the provision.
So the question is, why do you think, and you will know your customer best, why is this happening? Where is the stress? Why is there a delay or default in payments? And you said you're willing to handhold for a couple of months. I mean, by when do you expect the situation to start stabilizing, or when will you take the call to start auctioning? I mean, I'm just trying to understand how long why this is happening at a behavioral granular level, and by when will you either start auctioning or expect repayment? So when should we expect an improvement on asset quality?
See, the asset quality has not changed. It is only the NPA, these are technical NPAs. The asset quality is still good, 100%, 110% good. So there is nothing wrong with the asset quality. It's only that we are giving more time. See, we would like to support the customer. And why do people insist that we should auction the gold quickly? Why you want to auction the gold? Customers' gold, these are all ornaments. These are lifelong savings of the people. If you can, give them more time. So we have been giving them time. We have never faced any problem with that. So if we at any time we want, we can auction all the gold. But then it will we'll have to refund money to the customer, because we are having too much of collateral. So if you get 100 rupees and our total dues is only 90, we have to return that 10 rupees. And the customer will ask, why did you auction my gold? We are in the money. You could have given me a little more time. That is exactly what we are doing. See, that is why customers take a gold loan. They get a little more time. It is not an EMI loan. So when they have some issues, they have some cash flow problems. That is why they're taking a gold loan. And if it extends, we give them more time. 3 months, 4 months, 5 months. After that, they'll come and take. Even if they don't take, we auction.
Right. What is the level, sir? So while we understand the thought process, just a number. A level of gross NPA that you are targeting by the end of the year?
See, again, NPA is never a problem. We can go even up to 5%, but then we will try to maintain this at this 3-4% itself. That's what we would like to maintain. But then it will mean that we'll have to auction a little faster. I don't think so. It is definitely,
that's what you want to do.
It is not in our heart to auction the gold.
Fair enough. Got that. So I just want to get back to the point about growth now. So you're saying in Q1, you had an 11% quarter-on-quarter revenue growth and 25% on a year-on-year basis. You're saying growth rates have continued in July and August. So for the full year, do you think we can anticipate a 20% kind of an AUM growth? And secondly, I think you've been on record with some of the investors saying competition has come down in the market. So could you elaborate on that?
So, I'll tell, we have been always giving guidance for 15% growth. Over the last 7-8 years, we have always been giving guidance for 15%. Quite often, we are able to do much better. Consider this as also like that. And about the revision in the guidance, probably next quarter, after Q2 results, we will think of giving a a guidance of the revision in the guidance. So we don't want to revise the guidance now, just after one quarter. We'll just come to the half year. So after two, we'll revise the guidance, seeing how things are moving in the second quarter
Fair
also.
enough. And on competition?
The question is about competition. Yes, I have also been seeing the very aggressive growth of banks, PSU banks, especially PSU banks, etc., on the gold loan has slightly waned. That means they are not that aggressive. They are still growing, but they are not aggressive as they were 3-4 months back or 2 quarters back.
Okay, all right. Hi, Mr. Muthoot. Good morning, and thanks a lot for joining in. Well, we'll be waiting for that revision close to quarter two because the start has been good, and one of the competitors are, they have been pushed back. I mean, wrapped on the knuckle. So we'll wait for that. Let's talk about the NIMs then. You had indicated that in fact the cost of borrowing will go up a little bit. So in quarter two, in comparison to quarter one, how much will the cost of borrowing go up, and what does it mean for your NIMs?
So we will try to maintain the NIMs. The NIMs we have is about 10% plus or minus maybe 0.5%. That's the NIMs we have. We will maintain that NIMs. But if the borrowing cost is going up, as I think maybe some of the borrowing cost, if it is very minor, we will absorb it. If it is going up higher, then we will pass it on to the customer. Because although when a customer borrows from any other place, if the interest is going up, he wouldn't mind paying us also high interest. So we try to absorb it as far as possible. And then maybe if it is not within our reach, we will pass it on to the customer. But we will maintain the NIM at the present NIM.
All right. It was around 11.5%. Your yield in the first quarter was around 18.3%. Also, you'll maintain it at those levels, right?
Yeah.
All right. Let's focus on the smaller part of your business, which is the MFI business. Belstar IPO, that's something Street has been looking forward to. Is it on the cards sometime in this year?
It's still on the cards. We're not in that much of a hurry, though, because it is a 100% subsidiary of Muthoot, and we have sufficient capital in Muthoot itself to support them, even if the IPO is delayed. So we'll wait for the IPO. Probably in the next 1 year, we should be able to do it. So.
Within 1 year, we should have that Belstar long-awaited MFI IPO that hits the market, right?
Yeah, yes.
Okay, what about the asset quality out there? That deteriorated a little bit, and your AUM declined as well. So for this part of the business, which is only 10% of your total AUM, what's the outlook on both these two parameters, AUM growth as well as asset quality?
Yeah, the AUM, the last year was quite good for the AUM. Now everybody is on a consolidation mode, collections, recoveries, etc. Not only Belstar, all the other microfinance are on the collection mode. So that must have been one of the reasons the AUM has, not grown. But then the asset quality, compared to other peers in the market, everybody has had a deterioration in asset quality, the NPA, and I think it's the same with the Belstar also. Nothing different from any other microfinance. I think on the top 5%, top 5 MFIs, our NPA levels are exactly much better than many others.
Okay, all right, Mr. Muthoot, we'll leave it on that note. Thank you so much for joining in. Good conversation with you, and we wish you the best of luck for the rest of the year. We'll take that break. On the other side, we get chatting with Mr. Brij Bhushan Agarwal, Vice Chairman and Managing Director at Shyam Metallics. Remember, the stock was in focus yesterday. It had a big up move after UBS initiated coverage with a very positive outlook. We'll figure out how the business is shaping up.
Welcome back. Well, Shyam Metallics and Energy, that's the stock in focus. I recall a year or so ago, we had ICICI Securities that come out with a note, and they were very bullish on the stock. And now yesterday, we had UBS that initiated coverage with a buy call, the target price at around 1,200 rupees per share. The brokerage has factored in a whole host of factors, and that's how they come out this price. To understand about the way ahead, as well as how things are shaping up, we have the Vice Chairman and Managing Director, Mr. Brij Bhushan Agarwal. Hi, Mr. Agarwal. Thanks a lot for joining in on the phone line. Well, I recall not too long ago when you listed, the market capitalization was roughly around $1 billion. Now you're on the way to around $3 billion, and your operating profit as well from the IPO, well, it's more than doubled. So there has been delivery, but the market wants to know what's the way ahead from here on. Now, one focal point is the VAP as a percentage of your total mix. UBS has said that they expect VAP to move up as a percentage of your total revenue as well as EBITDA to the high 60% odd. So as of now, what is it? And do you believe that you can do that?
Hi, good morning. Good morning, Nigel. Sorry, I'm on the telephone since I'm traveling. So if you see, Nigel, like all our future growth, it is coming on the downstream. And we are putting more investment on the value-added product like stainless steel, aluminiums. And, on the other side, we are also going backward in adding some more power plant to cut down the costs. So in the time to come, if you see in last 3 years, our value addition was 17 to 18%, and today it is more than 50%. In the time to come, in next 3 to 4 years, we expect that we should be able to cross more than 70 to 75%. And most of the investment is on the downstream side, on the value addition side, and also going backward on the cost side.
So, Mr. Agarwal, when your value-added products contribution goes up beyond 70% as you're guiding, what will it do to your margins? Is there a number you have in mind?
It is difficult for me to spell out, but definitely whatever margins we are doing today, it has to enhance because, you are seeing all the downstream projects will add more value forward, and the investment backward is also reducing the cost. So definitely the margin should improve around close to 4 to 5% in the time to come.
Okay, all right. Let's talk about it on an EBITDA per ton basis, because you've been changing your mix towards VAP and stainless, the other products that you're coming up with, aluminum foils as well. On an EBITDA per ton, it gives you far better EBITDA per ton. Now, UBS in their note, they're saying that currently on the vicinity of around 4,000 rupees per ton. But they are factoring in a number in excess of 6,500 rupees per ton by FY27. Given that VAP will go up and you're focusing on the cost side as well, do you think that's possible? That's the aspiration, FY27?
We are completely positive on this. That is one of our major agenda, and we are diversifying into a different product mix in the same metal basket just to de-risk and to enhance the company more from the cyclic business to a comfortable business and more value-added product and more on the niche segment.
Right. So then we should work with an EBITDA per ton. The aspiration is that it moves to around 6,500 rupees at least by 2027.
We expect so. Yeah, we expect
got
so.
It.
Yep.
All right. So we have got that out of the way as well. Now let's focus on your capex plan. I recall a couple of years ago, or maybe 18 months or so ago, you laid out this ambitious plan, and you said you're going to spend 10,000 crore rupees as capex, which I think 50% is already done. So how much is left to be done? If you could break it up in FY25, FY26, how much would you spend? And what does it mean in terms of debt in books? As of now, your net cash, do you believe you can stay net cash?
Nigel, we started with around close to 2,500 crores capex during our IPO, and gradually with the time we have enhanced our capex plan to 10,000 crores. In last 3 years, we have already invested around 5,000 crores, out of which close to 2,300, 2,004 crores has been capitalized. And we expect that all this new capitalization, production and value should start, seeing in the coming year onwards. And for the balance of, 5,000 crores yearly, we are very concerned on our strong capex allocation plan. So this is going to be spent in the next 2 to 3 years.
Okay. All right. And you will continue to remain net cash, or what would the peak debt be in your books then?
We would love to be, because all the, if you see from last 15, 20 years, and, last 3 years also, since we are in the public domain, we have been always very concerned. Most of the capex and all we are doing from the internal accruals, and our borrowing is majorly on the working capital. Today we are sitting on the cash for more than 1,700 crores, and we have enough, in the time to come, numbers in the terms of EBITDA and all to plan our capex plan. Yeah.
Oh, okay, all right. And I'm seeing, cash flow from operations is around 1,500 to 1,700 crores put together with that 1,700 crores of cash you already have in the books. So you believe that you could stay net debt free even post this capex, right?
Yeah.
Okay. So since you mentioned about EBITDA, sir, as of last year, you did roughly around 1,600 crores. But going by all that you're saying, the estimate is that the FY27 EBITDA could be in the vicinity of around 3,600 crores. Doable? More than double from here?
If you see last 3 years from 6,000 crores, we have gone, our revenue has gone almost more than 13.5. And in next 3 years, 3.5 years, the new capex plan, what we are doing, we expect to more than double the revenue. And simultaneously, since we are expecting the margin as well as to enhance and further go better, we are in the line like we should be able to do a decent EBITDA.
Okay. And on ROCE, UBS believes that with all the steps that you're taking, the ROCE can hit 28% by FY27. Is that a reasonable assessment?
Yeah, because if you see, all the downstreams are not very heavy capex, and it's all value add, little different. So definitely the ROC has to go up further because it's majorly on the downstream is creating more margins, and the capacity what had to be added on the upstream side has already been added, and most of the downstream, 70-80% of the raw material, we will be consuming. So which will also help us to reduce the working capital load and burden in the system.
Okay, so that ROC number will head towards the late 20% is what you're telling us. Mr. Agarwal, at times it's a little bit tricky for a promoter, right? You came out with an issue at around 300 rupees approximately, post a good listing, then the stock price did dip. And then, in fact, you have sold some stake in the company, you have done a QIP as well. Now the promoter holding has come down to 75%, but the market capitalization has gone up. So there could be some kind of temptation maybe to trim some stake, or will you hold your stake at around the 74-75%?
Not really OFSs. OFS is not at all, because these were the compulsion, and we had been always very conservative and prudent on our approach.
Yes.
As Shyam Metallic is always a very investor and stakeholder friendly company, we would like to abide whatever is in the interest of the company. We would like to go on that.
So as of now, you have no plans to sell stake, and you're happy, promoter holding is happy at around the 74.5%, right?
100%, yeah.
Okay, final question, sir. The last week we had the Supreme Court verdict that said on a retrospective basis there could be some taxation that could come and hit some of these metal companies. For you, is there any tax notice or tax demand that is outstanding?
Fortunately, there's nothing, 0.01%, there's nothing with Shyam Metallic. We are completely sourcing our raw material from the miners, so we are not under any kind of future or any liability in this Supreme Court verdict. Yeah.
Okay, Mr. Agarwal, we appreciate you joining in and clearing the air on a whole host of factors. UBS believes there are better times to come, and going by all that you're saying, you concur with that. VAP going up to more than 70%, EBITDA per ton to around 6,000, 6,500 rupees per ton, and the EBITDA number as well could more than double in the next 3 years from here on. Appreciate you joining in and wishing you and your team all the very best.
Okay, let's move on then to the entire aviation space, because that's clearly had wings. Most of these stocks, particularly Interglobe Aviation, has done very well. To talk more about it, we now have with us one of the regional players, Fly 91. So they're a regional player which is based in Goa, and Manoj Chako, the MD and CEO, and he himself is an industry veteran. He was a former VP of Kingfisher Airlines. He now joins in, and a couple of months back, they started commercial operations, and they're slowly and steadily expanding. Mr. Chako, thank you very much for joining us on the show. We've seen very strong tailwinds for the entire industry in terms of the number of customers, people who are flying now. Crew prices have come down, but supply has been a bit of a constraint. SpiceJet has been looking to raise some money. Can you lay out, when you decided to start this business, what is it that you thought in terms of the opportunity for you?
Sure. So in terms of opportunity, the way we kind of saw it is, India is obviously one of the fastest growing aviation markets in the world. At this point of time, last year we had close to 150 million passengers that flew domestically, about 120 operational airports. We're going to go up to about 200 operational airports in the next a couple of years. And India is still a very constrained market in terms of the number of people traveling versus the supply that exists in the market. While there's a lot of capacity available between core sectors in India, which is really the big metros and the next level of cities, there's a huge gap in regional connectivity. So today you have less than 3% of seat capacity actually being deployed onto the tier 2 and tier 3 cities. And that's really where the headspace is. Like if you look at India today, we have just about 750 aircrafts, and that is less than possibly what the largest carrier in the US has got. So the headspace is huge. The growth is phenomenal. And we clearly see an opportunity to connect, the smaller towns and cities in India. That's really what got us going on this particular journey.
Mr. Chacko, good to have you on. I'm going to ask you a very basic, fundamental question, and one that I think saddens a lot of flyers in this country. India has, become the land where the doomsday is written for so many airlines, one after the other. I mean, if I start counting from the Air Deccan days to Sahara to Kingfisher, the latest being, of course, Go Airways because of the engine issues. And who knows, I mean, we're fingers crossed on SpiceJet now. Let's see how that's going. Now, while some of it could be mistakes made at a company level, but I mean, you're a veteran and you've seen, you've been there, done that, seen a lot of this go down. What ails the sector? The first sort of response that we typically usually get is that taxation is very high. But, taxes are part of my ticket price. So it's got to be more than that. What's going so wrong with Indian aviation?
Okay, so I'll kind of answer this at a very fundamental level, and this is not just about India. This is globally. What we typically see is the moment you approach aviation as a service industry, you kind of lose the plot. Aviation is the transportation business, and if you look at successful airlines worldwide, the moment they focus on this business as a pure point A to point B transportation business, you find that the focus of the airline is actually on the right set of metrics. Okay, again, one of the interesting points, which I think is good, especially from where we are today in India, is whenever we've had professionally set up and professionally managed airlines come into the fold, they have always been successful. And we've got a whole bunch of great examples. We have examples of, Rakesh Gangwalji and Rahul Bhatia getting together to form Indigo. We've got examples of Adil Ali in the Middle East setting up Air Arabia. We've got Wizz Air. So every time professionals have come together with professional funding to set up an airline, it's always been successful. A large part of the reason for past failures has been aviation has been approached more as a vanity industry as opposed to a transportation industry. So I think that's fundamental number one. Fundamental number two is aviation is not necessarily about the physical product that you get on the plane. That's all hygiene. It is really about how you create your network, how you bring in operational efficiencies, how you bring about cost leadership. I think these are some of the critical aspects that successful airlines have done. Okay, and any airline that focuses on these three things has always been successful anywhere in the world, including India. India's got a couple of great examples of that, similarly in the region as well. So I would basically attribute a lot of past failures to airlines not focusing on the fundamentals and rather focusing on it more from a vanity and a service industry perspective.
That's an interesting perspective, and yeah, a very refreshing one as well. Now let's come to the here and now, the present. What all this has meant is obviously we basically have just about two functioning airlines in the country right now. And if one goes by recent reports anyway, I think ticket prices for the upcoming festive season, they're already shooting through the roof. Someone, between 25 to 30% is the appreciation already. So from the perspective of immediate demand supply, mismatch capacity, pricing, what are we in for? And just, tell us, I think you're looking at a lot of the tier 2 markets in the south, Hyderabad, Bengaluru, some pockets in Maharashtra as well, of course, Goa. What is the capacity addition that you will be looking at?
So from a Fly91 perspective, we're kind of doing a very slow and measured growth. Our entire business plan is built on inducting 6 to 7, 76-seater regional aircrafts into play. As of now, we got 2 aircraft flying. We got 2 more coming in by Diwali, and we got 2 more coming in the last quarter of this year. So before March 31st, we would be 6 aircraft flying. As of now, we are connecting 7 destinations in the country, out of which, absolutely virgin destinations like Jalgaon and Sindhudurg, and, we also fly into Lakshadweep and connecting Pune. And the entire focus on slow, measured growth, but the slow, measured growth is really connecting the tier 2, tier 3, possibly even tier 4 kind of cities. And that is really where the wealth is in India today. That's where the propensity to spend is. That's where the aspiration is to kind of connect into the largest cities. Okay, and that is really the segment that we're going after. And from a plan perspective, like how I said, slow, measured growth, 6 to 7 aircrafts a year. Every year we're going to connect about 8 or 9 cities from one base. So year 2, we get into base 2, connect another 8 cities from there. 5 years, 32 aircrafts, 50 cities, 5 bases is the measured growth that Fly91 is focused on. And really about, what we call as Bharat Unbound. It's connecting the last mile.
Okay, all right, Mr. Chacko, we will leave it on that note for today. Thanks very much for joining in and giving us a sense on how aviation is shaping up. Of course, remember, the context is that yesterday there were several upgrades coming in on Interglobe. A lot of the brokers saying that there's going to be a sort of improvement in overall operations and profitability as well for the airline. And some of those targets are northwards of 5,000. So that's aviation. Let's take a break on that note. We'll come back on the other side and put the spotlight on the commodity markets.
Welcome back. Well, the markets are holding actually more or less flattish. We have seen a volatility. We've been 20-30 points down. We were up as well by 20-30 points in a bit of a range. Mitesh Thakkar joins us to help us out with quick analysis and his take on the markets. Mitesh, as flat as can be, so I think we'll focus on a couple of stocks. Tell us what you have for us.
Yeah. Nigel, a buy on Dabur and Hero Motors. I think, the two-wheeler space is doing very well. We have seen good action happening on the charts of Bajaj as well as TVS. Hero Motors is also showing some positive traction. So buy here with a stop below 5,325 on a target of 54.50, 54.70 to begin with, and then maybe even higher levels. And the other one is a buy on Dabur. That's another stock which is showing good positive traction on the intraday chart. So could see upside momentum. Buy here with a stop at about 636 for targets of 665.
Thank you very much for that. Let's turn our attention now to commodities. Manisha is now joining in. Manisha, what's the one commodity that you're tracking today?
Well, Reema, I'm looking at energy as a sector, and while we have seen the crude oil prices gain up by more than a percentage point overnight, the sector that really seems to be buzzing really is the coal prices. Well, that one is trading at an 8-month high. The month of August has been quite positive for coal prices, and we have seen prices gain up by almost 2.5% in a matter of last 2 trading sessions. So we're holding above $145 a ton. The new China coal capacity approvals have declined by 80% in 2024. That does show you that the investment and focus towards renewables is on the higher side. But this also has led to the coal imports within China continue to increase. So when you look at the month in the previous one, we have seen a higher gain onto that one. The first half of 2024 until now has seen China seaborne coal imports up by nearly 11% there. The global coal demand is expected on the higher side. There has been statements from IEA suggesting that while 2023 was a record global coal demand, 24 and the year 25 as well, we'll be looking at steady demand of growth going forward there. If you look at the previous year, we've seen very strong number at around 408,415 million tons of global coal demand going forward there. In the Indian markets as well, while the production capacity has been increasing and the renewable conversation has been quite on the higher side, this is a chart that will show you that the import numbers have kind of continued to increase here as well. Last year was a strong 261 million tons, and until now, for the first 4 months, we've seen 47 million tons of import in India for coal already happen. The last plate should show you on what we've seen in sense of prices in case of coal. We started this year with almost $131 a ton. We did see prices decline to 115. There was this whole conversation about renewables there. But at this point in time, we are trading at the higher point of the year and the 8-month highs at $150 a ton. Okay, all right. Got that. Manisha, thank you very much. So that's the commodity wrap-up. Let's move on. I mean, two of those stocks are really, really flying high. Remember, Nimesh, just before the opening, told us about this JP Morgan note on two-wheelers in general. In specific, they, I think, called out for Bajaj Auto and TVS. Look at the stocks rev up, Nimesh. Just go back and revisit that call, please.
Well, so, you know, the two-wheeler stocks are buzzing in trade largely on back of the JP Morgan note, where they've upgraded TVS Motors to overweight from neutral, and they've raised the target price there to 3050. Even UBS has today put out a note on TVS Motors, and they've raised the target price to 3200. So UBS is the most aggressive in terms of target price on TVS Motors. Even on Bajaj Auto, JP Morgan has raised the target price to 11,225, and they have an overweight stance. However, they've downgraded Hero Motor to neutral now, and they have a target price there of 50 to 30, and they remain cautious on Eicher Motors with a neutral rating and a target price of 4110. But on the industry, they believe, the JP Morgan believes that two-wheelers is a more attractive segment, and they expect the growth in two-wheelers to outpace the PV growth, at least in the near term. Electrification is progressing, but not at a faster pace, which means that there won't be any margin pressures, at least in the near term, for the incumbent players. For TVS, they believe that the market share gain is quite resilient, and hence they have raised the EPS estimates by 5 to 18% over the next 2 years between FY25 and FY26. However, on Bajaj Auto, JP Morgan believes that it's a potent combination of ability and intent, and even on Bajaj Auto, they've raised the EPS estimates for FY26, FY27 by 3 to 5%. So, big upgrade on TVS Motors by a couple of brokerages, but JP Morgan believes that the two-wheeler space is more attractive, and there will be larger growth compared to the PV segment.
Okay, all right. Thanks a lot for that, Nimesh. Well, the markets are flat, but a lot of stocks in the broader markets are moving around. Just take a look at a few of them. NIIT Limited, the stock is up close to around 9%. Big up move is what we're seeing on that one, and on very high volumes. Shriram Properties, earlier this week, they were talking about trying to rebrand themselves and trying to focus on other newer segments. That stock's up close to around 6%. For the week, it's done quite well. Railtel is up close to around 6% or thereabouts. You have Jyoti Structures as well. The numbers were quite disappointing, one of those potential turnaround candidates. But the first quarter's numbers were disappointing. The stock corrected more than 25%, and now, in fact, it's pulling back from those lows as well. So that's another top volume mover. Nykaa is up close to around 4% as we speak. And CDSL as well, another one that's up close to around 3.5%. So quite a few stocks, guys, from the broader markets that are moving higher.
Absolutely. Plenty of buzz in the mid-cap and small-cap arena. We need to take a break on that note. But on the other side, our monetary policy special coming up. Lata will get chatting with Ashima Goel, Shashank Bhide and Jayant R. Verma, external members of MPC, to focus on the minutes of the last policy meeting. Stay tuned for that.